Hey everyone, welcome to High School Dropouts Advice. If you need subtitles, please click on the CC button right here. Usually it takes up to 2 hours after uploading the video for them to appear. We will talk about two great stocks that will benefit very well from Joe Biden's $2 trillion infrastructure plan. In case you didn't watch my latest video where I talk about the $2 trillion plan, I will recap it for you right now. We see that a lot of money goes into our infrastructure. Road, bridges, road safety, public transit, railways, improve infrastructure resilience, airports, waterways, ports of entry, reconnecting the neighborhoods that are cut off by highways. Let me show you more. Remove lead pipes for water lines, modernization of the water system, high-speed internet, electric grid, clean energy, and finally, let me show you this. Home or community-based care for elderly and people with disabilities, research and development, manufacturing and business and domestic manufacturers. I don't want to just recommend you some solar stocks because there's plenty of them. There's only 100 billion which flows into clean energy. So this would not be a good stock that would benefit greatly from this plan. Two big companies will benefit from everything I told you. We can agree that everything I told you requires construction. There will be a lot of construction. If we have so much construction going on, we can safely bet on companies that manufacture construction equipment and vehicles. We have two big companies in the United States which will benefit in the upcoming next 8 years. We have Caterpillar Inc. and John Deere. John Deere being a little cheaper evaluated and having a strong exposure in agriculture machinery is the one I would prefer. But you will not do wrong if you choose Caterpillar. Let me show you their website. You can see from the website that they offer all products for construction, from heavy-duty equipment to smaller compact equipment. We can all agree, when we do construction, one of the primary materials we need is lumber. You can see that John Deere also provides a big selection for forestry equipment. Many people and investors don't know that agricultural products are increasing in price, not just the meat but also corn. Let me give you a quick example here. The corn future has nearly doubled its price. We didn't have this price in the last 8 years. So this means that farmers can afford new equipment as well. They have all kinds of equipment from planting, harvesting, cutting, shredding, seeding, spraying. So you get the idea. Now that you know what this company does, have a look at the financials. We can see that they have great fundamentals, more revenue and more profit each year. Their balance sheet looks fine and more assets than debt, and all numbers look very consistent. We have a very well-run company. This is not a typical growth company we see, but this is a company with stable income, stable dividends of 0.97% and great potentials to gain more sales in the following years. Now let me pull this up. We see that the construction and forestry equipments are making nearly as much as the agriculture equipment. 3.1 billion versus 2.5 billion. So we can expect with President Biden's plan that we see higher numbers in both sections very soon. But I think that the construction equipment income will overtake the ones for agriculture. So we got great fundamentals and a great company. The earning release actually was better than expected. The analyst estimate for the profit per share was $2.15 per share, but Deere & Co. ended up with $3.87 per share, nearly double as much. Also, the revenue was $2 billion higher than what experts had forecast. The best thing is that the company also has to raise their forecast by $1 billion for their income forecast. So they are doing better than they thought. So with the current development, this stock is an excellent pick for the next 10 years. If you like my video so far, please don't forget to give me a like, consider to share and subscribe to my channel so you don't miss any other exciting investment opportunity. There's another stock which had great news today and had better than expected results. The company is Tesla. Let me show you the news first and tell you why I think that Tesla will soon gain back a lost advantage. Tesla more than doubles Q1 sales, delivers 185,000 vehicles. The Q1 EV sales in the US look like this. We see that Model Y is by far the most popular model, followed by Model 3. The Chevy Bolt EV, Mustang and the Audi e-tron sales are on the lower end. Even the Audi e-tron has a record sale. Tesla is still far ahead. The momentum for the other car makers might come later, but Tesla is by far the biggest player. A fun fact is that non-Tesla's EV car sales combined would not exceed the sales of a Honda Civic in the same time period. This might show you how weak they still are, or that the EV revolution is still at the beginning. Another good news for Tesla. Tesla beers are becoming an endangered species. We can see the short interest has fallen down to 5.81%, which is very low for a stock like Tesla, which had over 25% short sellers at the time of Tesla's rise. Usually stocks of the SP 500 get shorted at 3% range, so Tesla is still higher than the average stock, but is significantly lower than it used to be. I told you a little earlier that Tesla will gain back one of the advantage for car sales, which has to do with the $7,500 tax credit you can receive when you buy an electric car. There was a cap of 200,000 vehicles getting the $7,500 tax credit per car maker. Once 200,000 Teslas were sold, there were no more $7,500 tax credits for buyers who came too late. President Biden wants to remove this cap so people who like Tesla can buy Tesla for a discount. This would be great news. This would put the base model of the Model 3 at around 30,000 after the tax credit. I think 30,000 for a new Tesla is a good deal. If the Model 2 is coming out with a base price of 25,000 and a 7,500 tax credit, it would bring the car to only 17,500. This will get us a huge step forward in achieving a complete EV revolution. Tesla will play a key role in the EV revolution. The stock is trading for $661 per stock, and it looks like it has built a support at around the $600 mark. Tesla's capacity is well prepared for up to a 1.3 million EVs per year, better prepared than any other car manufacturer who wants to be part of the EV race. Tesla will most likely have around 850,000 car sales this year, so there is still some room where Tesla can grow in. The best thing about Tesla is the capability to scale. We have many good EV car makers who have good designs, good cars and specs, but weak scalability capability at the moment. Anyways, for legal reasons, I have to say I'm not a financial advisor. I'm just a guy on YouTube. Do your own due diligence and remember that your money is your responsibility. If you like my video, please subscribe to my channel where I update you about exciting stock news and investment opportunities. Thank you so much and see you hopefully in the next video. Thank you, bye!